Welcome to the StockOptionAssassin.com's weekly video for swing trading options. This is Eric. Today is August 3rd, 2012. We are about 20-30 minutes before the close today. I'm going to go ahead and do the video here. And I'm going to start off with the spiders. And basically, just to kind of recap the week, we had the Fed come out. Their meeting was Tuesday, Wednesday. Basically, they're not doing anything yet. Then you also have the ECB, which had a big threat last week, and you can see the surge we got last week. And then as we pulled back during the week, we came right back into support. ECB kind of disappointed yesterday. There was a little bit of a sell-off, and then today there's just a big pop, and we're actually starting to pull off the high. So we'll see how we actually close today. But right now we're definitely off the highs. We're still up 1.8%. So what's interesting is that the central banks, the Fed, they're not actually doing anything, but they're threatening to do something, and that alone is keeping the markets afloat. You are getting a little bit better than expected numbers out of some economic things recently. Jobs data was decent today. A little bit of expansion in some areas. So there's a little bit of positive news, at least in the United States. Global markets, manufacturing's down. With global PMI coming out this week. So there was a huge amount of information. And so let's just kind of look at some levels. So with our market timing service members, what we've been focusing on is this channel, as a lot of people. But what we've been pointing out is that we had this uptrend in the bottom of the channel here. We came into support here. We actually broke this level, did not confirm below, and then popped back up. And we actually entered a little bit of a short here. We ended up getting stopped back out, but we got, we closed back up in the channel. We popped up, and now we pulled right back. So this channel was still intact. We did kind of technically close below yesterday, but you can see obviously we're back in the channel. We're right in the center here, and we have the uptrending channel part. All the moving averages here are in somewhat bullish mode, where you have the slower ones the faster moving averages fanned out over the slower ones. You have the 13 EMA as the purple, you have the yellow 20 simple, the 50 simple is in blue here, and then you have the 200 here. So what I'm looking for, and I talked about this in last week's video, I was looking for a pop up into 139.50, somewhere in there, and I wanted to short, and we never got there. So now that we've kind of retraced, we have to kind of set our potential high even higher, and one way I'm going to do that is by using my Fibonacci retracement tool. And you can see last week we had this pop, and we pulled back, basically had a 618 retracement of last week, and we're closing above the high. Well, okay, let me say we still had a few minutes before the close, but essentially if we close above this high, then there's a good chance we're going to get to the 27 extension of this move, and that's going to put you at 140.65. Coincidentally, that level is going to line up relatively well with these previous highs of this pivot. So what I would be looking for next week is continuation, potentially Monday, and I would definitely be shorting the 140.65 area. Now you can do that with the spiders itself, which we might actually do that. However, what I would also do, you do have the potential of if things really get going, to kind of retest the high. So I would enter kind of a smaller short here, and then I would add to the position here and look for some kind of retracement, at least back to the the moving averages. Maybe we don't totally break down, but basically you're shorting the upper side of this channel, and trade and looking for a move back into the bottom part. You would take profits down here. If you do break out, a good profit taking area on the put side would be at the 139 level. So if you do short up here and you retrace, you want to take profits here, leave the rest with a break-even stop, and see if we can break down or not. That's kind of what I'm kind of looking at the spiders. So let me talk about a long trade I took this week. I'm actually still in. I'm planning on holding over the weekend. That is Intel. And again, I talked about this with my members. You can see Intel earnings are over, right? We had earnings here. Earnings, we popped, we pulled back, retested the lows. You're getting bullish divergence with the squeeze indicator. There's some other proprietary stuff we do with our members, but you can kind of see here with this, but we get bullish divergence here. We're kind of consolidating above mean. It took some Intel calls. We went to the September 26 call, so we're up about 40% here. I do have some shorts as well that are not doing so well, so I'm actually relatively well hedged here. But if we do get some continuation, I would look for, let me bring my fib back in here. This was the last kind of move before the consolidation here. So you have the 27 extension, which goes with this pivot, and I would potentially look for a move back up to 26, 2680, whatever that is. So that's kind of what I'm looking at for Intel. And you do have the moving averages pulling around there too. So a couple other plays we did not actually trade, but we were looking at was Caterpillar. Similar situation. We had earnings, bullish divergence, popped up, pulled back, consolidated here, and you're getting a nice little pop on Caterpillar today. I'm not completely convinced we're going to get back to the 200 up here anytime soon, but I would not be surprised to see 87.50, potentially, 89, call it 90 here. That's a reasonable target. Again, if you put a fib on this move, and we pull back at a 618 retracement, 89 would put you at the 27 extension. So if you can't get up there, it's reasonable to expect a move to $89. Another one we're looking at is Boeing. Again, had earnings, had a little bit of pop after earnings, is now trading at the bottom of the channel. Not as bullish today, but I think this channel is still intact. You are in a squeeze here, which makes this a little more interesting to where you're not getting how do I say it? You're not getting a huge variance here, and what I mean by variance is you're not able to really break out and oscillate. We're kind of chopping around the zero level, and that means that this thing could kind of go either way. But as of right now, you did make a new high. The squeeze did not make a new high, so a little bit of I kind of look at this as more of a range trading. So you could take a small trade, look for a move back to the upper top of the range here, or let's call it 76, and then I would look to potentially take profits, potentially short back to the bottom part of the range, with we'll call it 72, 73. So those are a few ways we're looking to play the market this week. We actually really took it light, and we're really trying to be patient with our trades this week because the market is just so unpredictable. But one thing I am noticing that the market is starting to shrug off, not starting, but it has been shrugging off bad news and also rallying on good news. So, you got to give the bulls some credit here. I'm still in the bearish camp that we're going to roll over and retest the 200-day at some point on the spiders. But, until that happens, we're just going to be waiting. So look to play the ranges. Look to play, the upper part of the trend channel still until that pattern breaks. Then that's a good strategy for you guys. So hopefully that helps. You guys have a great weekend, and I will talk to you next week.